Hi, this is Todd Brow with Senior Insurance Marketing, and we have a great 2-year and a 5-year annuity here with Equitable. And with us today is Mason to tell us all about it. So take it away, Mason.
Hey everybody, Mason Marash here. I'm going to go ahead and jump right into this new fixed annuity from Equitable. It's a great solution for clients and it's perfectly positioned for today's environment. With the market going crazy, rates still extremely low, you're going to find an excellent place for a fit for many of your clients and potential clients with this new policy with Equitable. It's called the Secure Savings, and it's a multi-year guaranteed annuity. So it's got growth you can count on with fixed guaranteed rates that are extremely competitive in today's low rate environment. You've got a short-term commitment to work off of. I can't tell you how many times I hear, do we have a decent 2-year, 3-year, whatever rate available to us? And I have, up until this point, had to tell everybody, no, I'm sorry, or here's what's available, and I know it's not that great. What you're going to find is this is an excellent option. Principal protection through the guarantees of the insurance company. Of course, tax deferral on non-qualified assets. Access to funds through free withdrawals. Income options for both guaranteed and shorter, not guaranteed lifetime income, and wealth transfer, guaranteed death benefit to pass along to beneficiaries. So first thing I wanted to do was look at our competition. What's our competition in a MYG scenario? And it's typically CDs. And I know everybody can go out online and find maybe a 3-year that's got a 2% rate through some bank out of Bangladesh or something. But what I like to do is look at the rates we're actually talking with our clients about, and that's the rates that they have available at their local bank. So this is my rate sheet from Commerce Bank. That's a local bank here in Kansas City. And their 2-year guaranteed rate is 0.3%. If I want to bump it up and make a long-term 5-year commitment, is at 0.45%. So this is our competition we're competing with today, and you're going to find that we're in an excellent position to be able to go in and gather some of those assets. So the policy itself issues through age 90. So we have availability for even most of our oldest age clients to have something that they can better their situation with. The minimum is $20,000. So that's a big minimum for most multi-year guarantees, and I realize that. But for many of our clients, it's still something that they could get into. And the maximum is $500,000. Not to say that they would not take more, it would just require home office approval. So how long are the guarantee periods we have available to us? We have a 2- and a 5-year guarantee, and I'll get into that here shortly. As far as suitability goes, most of you are familiar with the suitability process, but if suitability form is required, where they're going to look at a client's income, assets, liquidity, all of those things, just to make sure that it's a suitable product for them. As far as the interest rates go, the 2-year credited guaranteed rate is guaranteed at an initial rate of, they just bumped this up to 2.65%, and it's going to be guaranteed for 2 years. Then the client has the option of locking in an additional 3 years at 3.5% currently. Now that rate is not guaranteed. I can't tell you exactly what it's going to be 2 years from now. If rates go up, it certainly could be higher. If rates go down, it could be lower. But right now, it's priced to be a 3.5% guarantee for 3 more years, giving the client a total 5-year commitment. But again, that second commitment term being only 3 years long, and they're getting a 3.5% guarantee, which I would wager is going to be higher than anything that's available for 3 years, 2 years from now. The other option you have is to commit to 5 years today, and that rate is currently at 3.45%. Okay? Both of these products are built on a 7-year chassis, and I'm going to get into that in a second. As far as commission goes, The 2-year offers an initial commission of 1%. So it's 1% commission to the agent for a 2-year guarantee for the client. And that is level 0 through all the way up through age 90. It does not matter on that initial 1% commission. If the client chooses after the second policy year to renew for an additional 3 years, and again, going back to that rate of around 3.5% is what we're looking at today, they are going to pay the agent an additional 1.5% commission if the client is currently age 0 to 75. Okay, so what does that mean? You have a 5-year contract. If the client re-ups for those additional 3 years, you're making 2.5% overall during that time. If the client's older, they're 76 to 90, you can see there, they're going to pay an additional 1% commission at that point. So you're at 2%. So it's an excellent opportunity for a client to commit to a short-term guarantee that they can walk away from after 2 years, but have the opportunity to re-up with the company, and they're going to compensate the agent for that. The 5-year pays 2%, 0 to age 75, 175, 76 to 80, and 0.75%, 81 to 90. Now they do, again, on the 5-year, like I said, these are both built on a 7-year chassis. So if the client walks away after the 5th year, obviously no additional commission paid. If they, again, take the option to re-up for an additional 2 years, they will pay the agent an additional 1% guarantee, or 1% commission at that time, okay? One important caveat I want to note on this. In order to receive that renewal commission, the agent does still have to be licensed with that carrier, with Equitable, okay? If you get canceled, that commission will not be paid to you. So it's important to know that. So free withdrawals, after the first policy year, they have 5% free withdrawal available to the client. After the guarantee period, so if the client wishes to, after the 2-year or the 5-year guarantee, they can take any free withdrawal amount that they want to and re-up for the additional time, or obviously they can take their entire account value. This is not return of premium. This is their entire account value and walk away after that 2 or 5-year term. There is also income options built into the policy, where if the client wants to annuitize the policy, they can take a guaranteed payment either for life or for just a shorter guaranteed term. Wealth transfer. So upon the death of the owner, if no income option was elected, essentially if it was not annuitized, the account value is then paid out to the beneficiary. So it's the full account value. I know some MYGs out there today will only pay the full account value if you liquidate over a certain amount of time, like 5 years or something like that. Some of them I've even seen only offer a surrender value at death. So this will pay, no matter when it is in the policy, the full account value at death. Important to note, if an income option was elected, those remaining payments will go to the beneficiaries if it was over a guarantee period. However, if it was a lifetime payout, life-only payout that was elected, those payments will stop. So surrender charges, and this actually applies to both the 2-year and the 5-year policy. Now remember, I told you in the beginning that this policy is built on a 7-year term. It just allows for access to the full funds at the 2 and the 5-year mark. First year, you're at 9%, and then it drops by 1% every single year. There is a market value adjustment built into the policy that will adjust the account value up or down if you surrender only during the surrender charge term. And this, again, does not take effect during the window in which the client can remove funds without any penalty. So at the end of the 2-year, at the end of the 5-year, it will not come into play. Equitable does have a great calculator available to them. This is something that you can get right from their website. If you have a client and you want to show them what this thing can do for them, it's very simple, very easy to use, and it's a great tool just to be able to use to show, okay, Mr. or Mrs. Client, you put $100,000 into this policy. 2 years from now, I will guarantee you're going to have $105,000. Nice and easy to use, especially when you're talking to clients about their CD money. Something else that's beneficial, we have some pre-approved ads ready to go today. Now, this is actually showing the old rate that they had available to them, the 2.5% on the 2-year. It's, again, like we said, bumped up to 2.65%, and the 3.3 is obviously bumped up to 3.45. But this is a newspaper ad you can use today to help you get out there and drum up some business. A couple notes about Equitable Life. They're a very strong and actually very old company. They're Utah's oldest active life insurers, and they've been around since 1935. So even though it's not a company every client in the world has heard of, they have been around for a very long time, and they're a strong company. And they do business in 45 states. So a couple things I want to just highlight for you guys as far as, you know, who is this suitable for? Who should I look for as a client? Now, I will tell you, like I said, it's those clients that are out there with CDs paying in the 0.3 to 0.5% range that are open to something like this. So if you're out there and you're working on a final expense case or a med sub case, a great approach would be when you've got that business closed out. Oh, by the way, the old Columbo approach. I don't know if you're happy with your current CD rates, but right now I've got a 2-year guarantee at 2.65%, and you can walk away. Something as simple as that can make the difference at the end of one of those other sales to help convert that client. I also believe this is a huge opportunity for clients that have never bought an annuity before because who knows why. They heard something bad about annuities in the media, or their financial advisor says stay away. This is a great opportunity to make a very small commitment for 2 years, just to take that and make that available to them, and it allows the agent to now have their foot in the door with the client on the annuity side. That's all I had for you guys today. I know it was a short, quick webinar. I hope it was helpful. If you'd like more information on Equitable, if you'd like more information on the product, Todd has everything. I will point out one thing that is unique for Senior Insurance Marketing. They're one of the few companies out there today that can even offer this policy. They were able to get in with an initial group and can offer it today. Most marketing companies can't even sell this thing yet. So we're in a unique opportunity to get a jump start. You guys get out there with your clients and start making some sales. Todd, that's all I had for you guys today.
Hey, thanks, Mason. I really appreciate it. And like Mason said, give us a call here at Senior Insurance Marketing. We'll be happy to help you out with getting contracted, apps, brochures, explain more about the product. Give us a call here, 877-800-3080, and be happy to help you out. And I thank everyone for their time today, and have a great day.